World economists have in recent years referred to Africa as the next frontier. While global economies crumbled in 2008 and 2009, several African markets continued to flourish and the gross domestic product kept growing, a factor that has kept private equity funds put a keen eye on East Africa. According to the Emerging Markets Private Equity Association, private equity fundraising for emerging markets reached a record-breaking $66.5 billion in 2008, backing international trends and representing a 12% increase from the prior all-time high of $59.2 billion in 2007. Fast growth sectors within the East African region are presenting lucrative opportunities for PEs. Where demand has been a shortfall, PE firms are seeing potential. So, what are the hotspots in Africa's private equity market?
What we found is growth has been driven predominantly by two aspects. The first aspect is really under-penetration. So if we look at the markets in which we're involved, for example, in the power sector, there's much more demand than there is supply. So there's a huge level of under-penetration and provision of these services. The second aspect that we're seeing a lot of is inefficiency. So really looking at providing the most efficient service in terms of cost of capital and benchmarking the services to world-class standards.
The biggest opportunity for venture capital and private equity in East Africa is really the development of a regional market for goods and services and economic integration, sort of offering greater potential for businesses that are currently operating in a single country.
Sectors such as agriculture, infrastructure, ICT and energy take the cream of investors' favorites, and local players with ground knowledge are admit that the economy is ripe for investment.
This is not rocket science. There are extraordinary returns to be had, and I think the big advantage right now is that we have game-changing events going on around the region. Let me give you an example. Uganda, GDP $8.5 billion, value of oil in the ground $170 billion. This is what you call an inflection point, and I think you've got lots of investors looking at this opportunity and thinking also we've got 200 million consumers in a very small area. Let's go and look at that.
East Africa's agriculture contributes 36% to the economy's GDP, though it is dotted with millions of small-scale farmers, and our governments are urging a shift to commercial farming, an area where venture capital firms are encouraged to focus on. Other opportunities include livestock production, processing, packaging, storage and distribution, and also marketing.
Technology and telecoms really is picking up, and it's largely driven by the fact that whereas Asian growth, India and China was driven by manufacturing, what we're seeing increasingly is that Africa's growth is being driven by consumption.
Local farm Trans-Century Group holds 20% of Rift Valley Railways.
In 1980, so 30 odd years ago, the railway was moving 4 times more cargo than it moves today. Over that 30-year period, the Kenya economy has grown many more times than 4 times. So, it's a very clear business case in terms of the actual business need for the railway line is very huge. When we initially invested in, Rift Valley Railways, I think it's very clear it's a business, that hasn't performed in the past. And the business case wasn't always clear to everybody. But from us, we really look at it in terms of not how the business is performing today, but we really look at the underlying fundamentals.
Despite the growth in private equity and venture capital in East Africa, there are challenges.
The major challenge is really market understanding of what private equity actually is. There tends to be a misconception that private equity is investment banking or something different to what it actually is, both by the business community, who in some respects look at it with skepticism and not really as an enabler of business.
Besides providing capital, private equity and venture capital funds inject innovative thinking into the running of businesses.
What you will see with private equity firms operating in Africa is that they tend to be very active investors. They're not passive investors who put a little bit of money into lots of companies and wait 5 years and hope to see what happens. They're very active investors who get very much involved in the business of the company. East Africa Capital Partners, as I mentioned, we all have technology backgrounds, and so we are very specialist in what we do, and having all that knowledge within what is essentially the shareholder of our investments means that we can bring a lot of value to the boardroom.
Like every other investment, there are also risks that must be mitigated, though experts say within the East African region, perceived risk is higher than actual risk.
I think the market gets veiled by a fog of propaganda and a misunderstanding of what African political risk really is. If you look at returns that we've seen returns, I think, that have averaged in Africa 31% in US dollars, and I think that was some UN data that came out. This is way off the scale, and I think suddenly it's like a penny has dropped, and people have looked at these numbers and seen that there is a massive opportunity.
Quite honestly, the biggest risk that we have is in human capital. Really finding the best managers domestically and internationally who can come and deliver and run these companies. Now, if we were not a local domestic player, it would be very difficult for us to really understand who are the key managers, where do we find these managers, and how do we place them into our business. Because we're a local domestic player, we have fantastic networks. We really understand, where it is that we can find some of these people to run some of our businesses. The second aspect is, especially if you want to be involved in power and infrastructure, etc., you need to understand the regulatory environment very well. And again, you need to be very well clued into the local aspects of the market.
Going forward, experts believe the growing economies will lure foreign investment into the East African region, bringing in new capital, experience and fresh management styles that will steer forward East Africa's economy.